Oh man, we just found evidence that FTX customer funds are back on the move. Yes, the hacked funds amassing $600 million have just had an update, with now much of the funds being converted from DAI to Ethereum. Yes, does this now pose a risk for Ethereum? Because this one hacker is now the 36th largest Ethereum whale in the market. In this video, we're going to break down exactly what this latest update is, what this means for the crypto markets, and where we go from here. Guys, don't forget to subscribe. If you want to buy any crypto, check out the links in the description. And as you can see here, guys, this was initially shared by MEXC, one of the data analytics companies, and what they found out was that one of the major wallets started to put funds on the move again just hours ago. Very, very interesting here. Remember, the initial exploit was about $600 million taken from FTX user wallets and moved out. Now, many have claimed this is an insider job. Many claim to know who this was. We're going to come on to that shortly thereafter. One thing we have noticed is that whoever is doing this is very inexperienced and are likely panicking on how to get this off onto an off ramp, because that's the hardest thing with any major crypto hack. It's the bit of getting it off the blockchain onto an off ramp. That is when you typically get caught as a crypto hacker. What we can see is that the funds were siphoned from FTX's crypto wallet late Friday. We covered that off. The FTX Telegram group then officially said you should delete all the apps. We don't know what could be happening here. And they moved the rest onto cold storage to protect it, right? Because they've gone into liquidation. We then saw multiple addresses connected to the account's drainer today transfer over 21,000 Ethereum, which is about $27 million, to one address. These were then converted to a stablecoin DAI. Now, why would they transfer to stablecoin DAI? This is very important, guys. If you're like working on becoming a hacker, remember USDC, USDT Tether. So the Circle and Tether ones, both of those can be whitelisted, so you can have sanctions. If the government tell Tether or USDC to whitelist that money, they can, and therefore you cannot do anything with that. That is why they move across to the decentralized stablecoin, which is DAI, which they can then play with. Now, you also need to notice this was then done on the swapping service CalSwap. Again, another thing a lot of people are not familiar with. If you remember Tornado Swap, which, by the way, the founder of Tornado Swap is now in prison, yet Do Kwon, all these other people, Sam Bankman-Fried, all these rest of these high-profile guys are still getting away with their fraud, lies, and deception. This is a swapping service. Now, you can use a swapping service for good, and you can use it for bad. Now, some hackers do use these, because what it allows you to do is you put your stolen funds in, it mixes it all about, and then when you take it out on the other end, nobody knows who's taken what, okay? And it just splits it out into a bunch of different addresses. So you can throw in, let's say, 100 million in there, it mix it up, and it will throw it out in chunks of, let's say, 500,000 into a bunch of different wallets, so nobody can track what is the stolen funds. Okay, that's what a swapping service is, like Tornado Cash and CalSwap, which apparently was used here. Then we find out that the addresses over several transactions, like I just described, it comes out in several transactions, amassed over 48 million of DAI and then swapped it all into 37,000 Ether. The address now holds over 288 Ether and is the 35, I think it's 35 or 36th largest owner of the cryptocurrency. This is huge, guys. This is over $380 million, roughly, depending on the price of Ethereum, amount of Ethereum on the market. This is not a small amount. And if you take a look here, this puts them up there with the amount that Optimism have. You know, they've got more than Bitfinex holds in some of their wallets, OKX, more than coming up to where Lido is in position 27, right? This is a huge amount of Ethereum and does start to pose a risk. What are they trying to do? Will they dump this on the market? What is their plan for getting out? And the reality is, I don't think they even know their plan. And this is what's crazy. A lot of people are saying that the actions of these hackers, whoever were draining these funds, and many claim these were insiders, these are FTX people who are trying to do one final Hail Mary. If they can get out with 300 million, 250 million, we know that these guys have retail trading mentality, right? Sam Bankman-Fried and his team, they are the ultimate DJ, right? They love trading. They're hugely gamble like trading, and they're not in the business of building a stable business. So what are they going to do? When your back's up against the wall, what do traders do? These types of traders, they just want to go for one final Hail Mary, right? So maybe that is what they're looking to do, trying to get a 5, 6, 7, 8, 10, more eggs and try to get back into business, right? Is that what they're trying to do? Now, one of the things we've realized is they're extremely inexperienced. And one of the things that put that into the forefront from Friday was when they were trying to move a bunch of coins on the Tron network. And when they did so, they realized that they didn't have enough Ethereum, Tron TRX tokens to cover the gas fees. And guess what they did? Instead of reducing the amount so that the rest can be used for the gas fees that they transfer and take a little bit of hit on it, somebody transferred more to cover the gas fees from a personal wallet. So this leads a lot of people to say, oh, we think we know who it is. In fact, you even had a tweet from Nick Pareco over at Kraken, who says he thinks he knows who it was as well. So definitely we need to keep an eye on this space, because a few people are saying, oh, we've got some KYC, we think we know who this person is, we'd be able to track it, but we've got to be very, very careful, because this means a lot of hurt if that money is leaked onto exchanges. So again, just to recap, you can see a bunch of coins are moving from DAI across into Ethereum, again, showing that the funds is on the move and that they're trying to do something. They're not giving up yet. They're trying to get this money out to do something with it. And most people are not buying the fact that this was just a normal hacker. They're saying that this is an inside job. There was officially a backdoor put in place to do this. That's what a lot of people are claiming. A lot of people are claiming that Sam Bankman-Fried built a backdoor in the mechanism of FTX that allowed him to not only drain customer wallets, because he did that to put it into Alameda, right? That's how he put $9 billion of customer funds into Alameda, but also to leak in this case as well when it was the doomsday scenario and it was their final Hail Mary. So a lot going on right now. On top of that, huge update here. FTX says it could have over 1 million creditors. So they filed an update to their bankruptcy report, okay? So this is their official report filing. And they said, in fact, there could be more than 1 million creditors in these Chapter 11 cases. As such, the debtors submit that they have to give a list of their top 50. Normally, when you go into liquidation, we covered these same documents when we looked at Celsius, right? You have to provide a list of your top 20 creditors, who you own money to, the top 20, and then obviously you have to figure out how you're going to split it out. In this case, because of the sheer volume of the number of creditors they have, 1 million, this is insane. They're going to have to share a list of their top 50 instead. Despite all this right now, we have got markets in the green. We've got Bitcoin up 1.5%, trying to recover, right? Yesterday was an extremely volatile day, which led you as high as 17,170, but as low as in the 15,000s. But again, today we're showing a solid day, trying to work our way back to that 17,000 level. But we've got to be very, very careful, because what we could be forming here is a bearish continuation pattern, right? A big move to the downside. Do you consolidate, form a bit of a triangle, and then continue your move to the downside? So we need to see some strength. We need to grind out higher lows and keep working our way in some sort of an uptrend towards 17,600 level. That's this resistance level from here. Okay, and then we can work our way back up. That's what we need to look for. Traditional markets continue to move in the green. We're up here in the pre-market, almost 2% on the NASDAQ, S&P moving over 1%, and the Dow Jones being nearly 0.75% today. We've had big positive earnings. You had Walmart beating earnings and boosting their guidance. Home Depot producing strong earnings. We've got PPI inflation coming out. A lot of the market are expecting to see a positive number there, given that we saw CPI improve last week, and that will be out within, by the time I've uploaded this video, that figure will be out as well. So no doubt markets will be looking to that. We've also got a bunch of Fed officials, right, speaking this week. And to give you a quick summary so far of what's being said, it's been a bit of a mixed bag. You had Fed official Waller, who said markets were being overly optimistic and should prepare for more increases in rate hikes, which is very odd. We then had Brainard come out and said that the central bank should start to ease off rate increase. You can see there's mixed opinions here already amongst the Fed officials, and the market has decided, to all intents and purposes, that they're expecting 50 basis points at the next meeting. So they're expecting another increase, but not as much as the previous meeting. Now, incidentally, we have seen this probability notch down a little bit from when we looked at it yesterday. This was at 80% yesterday. It's now sitting at 75. And again, I expect this to fluctuate quite a lot, because now we are 4 weeks away from the next FOMC meeting on December the 4th. And this is what's frustrating. What's hugely frustrating is finally that the market is starting to show some signs of recovery. We saw inflation come down. If we see PPI come down in the next hour or so, that will be amazing as well. And I'm expecting markets to start feeling a little bit bullish, money to start to rotate back into growth stocks. And unfortunately, we're just in this period here on crypto where there is so much FUD circulating about what exchange is going to fall, what is going to be the fallout, what is this hacker going to do with the funds, is he going to dump his Ethereum, that it's going to hinder our chance of being correlated and outperforming, more importantly, the NASDAQ, right? Because the whole premise of this is when the NASDAQ was falling, Bitcoin was falling at least as much as the NASDAQ, if not more. But that was okay, because we expected when the markets come back, when bullish nature comes back and the NASDAQ starts moving, Bitcoin Bitcoin would move more than the Nasdaq, right? To account for that, because you fell so much more to the downside, you would spring back more to the upside as well. But because of this fundamental issue around FTX, the fear of ongoing regulation now, more regulatory scrutiny from the Department of Justice, from the SEC, these guys are going to really clamp down and make this stuff difficult over the next couple of years. This is going to worry a lot of institutions, it's going to worry a lot of the funds that were sitting on the sidelines waiting to come into Bitcoin. So we've got to monitor this very, very carefully. Now, one thing we know for sure is we still do have room to the downside. And this is an important message because a lot of people are feeling really really down and out. And to that, all I would say and remind you guys of is we formed this pattern exactly in the bear market of the 2017-2018 market, okay? And again, we saw this descending triangle, we broke to the downside, and we formed our lows of 3,300. I think everybody's forgotten this, right? We had this final capitulation, and we fell low, and then we tried to work our way back up, failed, and then eventually we had our next bull market. And this took well over a year and a half from the point that we're currently at. And if you look at where we're at now today, it's the same thing. We have broken from our descending triangle to the downside. Maybe there's a little bit more to go. Maybe we need to head to 14,000. Maybe we need to create a floor there and then work up to a comfortable level. Is that 17,000? Is that 18,000? Where we start to then go sideways before trying to work on our next bull run. Perhaps that's what we're trying to work on. But also, please do not forget that the previous retracement from 20,000 down to 3,000 was an 85% drawdown on Bitcoin. We've not achieved an 85% drawdown just yet. So that sounds crazy, but if you look at it, we've not fallen out of what characterizes a typical bear market in crypto. If you take this move from where we were at the all-time highs to where we are currently now, we are 75% down from all-time highs. Now, if you drew that down to the 85% level we saw in the previous bull market, that allows you to come all the way down to that 10,200 level on Bitcoin without breaking the characteristics of previous bull cycles. So again, you can price in another $6,000 move here on Bitcoin down to that 10,000 level, and still we're in what constitutes a typical bear market. So nobody should be shocked by here. If you just studied the previous cycles, you can see that this drawdown is just less percentage-wise than previous drawdowns. Okay, that's just a fact. That's just the data we saw on on-chains. We've covered this off before. We looked at various different on-chain pricing models to say, guys, we've not quite flushed out yet. Obviously, nobody wanted FTX to collapse. Nobody knew the ongoing and the ensuing fraudulent lies and deception and how that tied into Terra Luna and 3 Arrows Capital. Things are going to get messy, and no doubt there'll be more stuff that comes out which further hinders the reputation of crypto in the short term. But longer term, we need to ask ourselves, has anything changed? Or has it just further reiterated the need for decentralized money? Where have the failings occurred? Did the failings occur on your mining network? Did the failings occur on proof of stake? Did it occur on proof of work Bitcoin? No, it did not. It happened on the hands of mavericks, of people who thought they could exploit the name of crypto to carry through the lies and deceptions which they would previously have done on traditional finance, but due to the amount of difficulty and regulation, because that sponge has been rinsed completely dry, that they come across to crypto and they can do those far easier, far quicker, that they can spin up and become multi-billionaires in just a few years, in what would have taken them decades and decades of political lobbying and movement in the traditional finance markets. So let's remind ourselves, why did we create crypto? Why did Satoshi start with his vision back in 2008? Why? It was to create this decentralized money, or to prevent things like this from happening. And ultimately, this is all going to be part of the story blocks that pile up and form the long-term story of Bitcoin and crypto over time. Hope you guys enjoyed this video. Don't forget to smash up the likes and subscribe if you appreciate this type of content. Let me know in the comments. Don't forget to go watch this video here. Check out ijaz.uk/member, and I'll see you in the next one.